As many of you know, I made a video on April 27th where I shared my thoughts on the Starbucks Q2 2020 results, claiming that the stock would probably dip below $60 a share before May 1st due to a number of factors associated with the coronavirus. This video is to recap that prediction and go over the Q2 results as a whole. I want to start this video off by stating the obvious. I was clearly dead wrong. Starbucks, at the making of the script, is trading for $77.16 a share, down about 2% post earnings. This is a far cry from the doom I was predicting. Clearly, the market believes in the long-term vision and the plan set forth by leadership in order to navigate out of these treacherous times. For one, they announced initiatives to begin opening the US market just like the Chinese market, with a large amount allocated towards marketing and efficiency improvements for the drive-thru and mobile order front. While stores may remain closed from the inside, customers will still be able to order through the app as well as the drive-thru. The company claims that even before the pandemic hit, its to-go orders made up about 80% of all transactions, which translates well into this new temporary business model. In the end, if you listen to the full webcast, what is clear is that Starbucks believes that its businesses will make a full recovery by September. Quite an optimistic timeline. As far as my option play, specifically my May 1st put, unless there are significant underlying changes to the market prior to Friday, they will expire worthless, and therefore my return on investment will be a simple negative 100%. While I try to be as objective as possible in these videos, I can't help but to feel some frustration on this play. It seems like the market and Main Street are completely out of tune. While GDP is down to negative 4.5%, jobless claims keep going up, and there is no evidence that a second wave will be prevented, we see companies absolutely destroy earnings. Starbucks, as an example, had made significant gains in the weeks rolling up to the earnings call, and even with evidence that shows that their next quarter will likely be their worst, their stock stayed relatively flat, trading essentially as if nothing had happened. At current prices, it's not that far from all-time highs, and considering the events that have unfolded in the last few months and its exposure to the Chinese markets, I find it quite unbelievable. Thank you guys for watching, and I'm sorry for those who followed. I got this one wrong. Even with horrible economic numbers coming out of Wednesday morning, the market continues to rally. The perma bulls were right. Stocks only go up.